Well, good evening, everyone. Scott Henderson, shooter. And hey, we're going to go over primary waves, this week's edition. At the end of our presentation, please do review our disclosure. Let's jump right into this. Of course, we have lots of changes. I'd like to point out that Swing Trade Notes on Substack will have the long version and the short version of my market review. The long version, will be part of membership. The short version won't. It'll be like a public thing I'm going to do. So those of you at Fundamental Trends that just want that quick recap, that's there for you. The short read kind of thing. But ultimately, that's where it's going to live at the moment. And actually, you should be able to find anything you need right there at swingtradenotes.substack.com. All right, so let's talk about the SPY. I think we're really toppy here. I'm looking, there's a lot of protection coming in, but technically, outside of us breaking this trend support here, right here, we broke that low and this low, right? So once we broke out, if you draw a line straight up, we wick below there. We're kind of flagging, kind of a little heavy. Lux Algo sees it with two potential levels. I'm just going to say IDK. I really don't know here because all it's going to take is the wrong catalyst, and I think we roll over. And that is just the thought here. So, like I mentor in when I talk about trading strategies and, risk management, etc., whenever I get nervous and quote unquote, I am nervous, right? I don't want to have a lot on. As a matter of fact, I want to have the smallest amount on. So the rule is, from a technical standpoint, is trim into strength after you've had what appears to be three peaking drives. Well, here is one, here is two, and that makes three. That's the structure that I stick with. It's also broken below our most recent higher low. Now, we haven't had the body of the candle. Clear conviction to the downside would be a body of the candle that closes below this little wick right here, right there. All right. So we just want to keep that in mind. Manage your risk. There's no reason to chase anything unless it's an extremely high risk reward thing here. That's just my 2 cents. Taking a look at the NASDAQ. Now, much deeper potential retrace. Similar look, except for it looks a little more bearish. It looks more like this. Didn't quite have the breadth of this second candle or this candle, right? But clearly we didn't do this. Where we had a nice deep flush seller exhaustion that came in. The shelf held. The shelf that I'm really concerned about is right here. Most likely spot that we find support and then bounce would be here. But the concern is this really our fifth wave here? So was this one? Was this three? And is this five? Is that the case? Or are we going to get three peaking drives in five like we did in three? It's always the question. However, if we look at the wave structure, how our drives were in one, we have a much similar look to that where we're dipping. We're not pushing. We're not euphoric like we are in three here. So, the rule typically is when it comes down to Elliott wave is that when waves get toppy, they tend to broaden. Okay. And, Kirk has mentioned the broadening formation from these two highs and these two lows. So this lower low around 380 is not out of the question. However, the deep retrace, in other words, an elongated C, if we get a corrected leg, is down to about 400. That's quite a move from 600. So same thesis on the NASDAQ as the SPY. Also to note, liquidity has been treading really heavy in crypto. All right. We broke below 100K this weekend, which implies that there's a liquidity squeeze kind of thing. Not to the upside, but maybe everybody's cashing out. Maybe they know something. And we have many more connected people in crypto than we do in indices now and stock. So that may be a tell. So we want to keep that in mind. So again, I'm going to go back to trim into strength, right? Raise cash when you have the opportunity to. You always have the opportunity to buy it back. I just don't want to buy it back when I paid $10 and it's down at $5. All right, let's look at what's next. Okay, now I did something just a tad bit different this week. And the reason is because, there's when I see something that is conditional for me, one of the things that I want to make sure is I want to point out what I see when I see something that might be a little bit too noisy for where we are. Now, granted, we are in a demand zone here, and this shelf has done pretty well. We have another demand zone here. We have some sell side imbalance up here, right where we are. But notice that's, I don't have it actually marked on this chart, but it's up in this range, right where we are here. So this is our big sell. We're below this, right? Okay. When I measure the count and I look at this as an ABC structure, I don't see it as an ABC structure. I see this as one, wave two, wave three, maybe this is wave four, and wave five maybe comes down here to about $6. Now I jump down to the RSI, and what are we doing? We're confirming. Well, guess what? That means one more divergent lower low in price. Now, we are seeing a tad bit of divergent, but I want some conviction that we're heading back up. And also to notice the prior dip, we had 3 flushing drives. What do we have here? 1, and maybe this is 2, and it may not be done. Maybe we get a little back test up here. Obviously, I'm wrong if we close back above like this 1150, I think it is right here. However, that's the only conviction I have. And let me just review that for a second. This is like ironclad. I want this or I'm not interested kind of thing. All right. When we get a higher low, right? I want to see a higher high after my prior high, okay? Then I want that trend to hold, right? Once this trend gap below it, guess what? It broke the rule. I don't like it now, all right? So now we come back, we back test. We sort of put in a double bottom on this support, so we didn't get into the wick. Now I'm interested again, but I don't get interested till we break out above this number. So let me come over here and suggest why I don't like the way this looks. Part of the reason is this sell side imbalance right here. So we're going to test this low, I think. I mean, which is only about $8. I think that's the most likely shelf, all right, if it's going to hold. But this is a really noisy broadening formation. Noisy, okay? And when I say noisy, we've already broke. If I draw a line from this low and this low, we've already broken below it. So we've closed below it. It's not this kind of was the overshoot. Then we kind of had buyer rejection and we're heading lower. So I'm thinking that we continue, maybe this last leg's a clean ABC and we get down to that 750 zone. But until it gets back above about that 1150, it doesn't excite me, just with the condition of the market, everything that's going on. And I wanted to cover that. All right, let's take a look at UNH. Now, we did a pretty decent job. I didn't catch the low, have to admit. The initial flush, I know some of you sold cash secured puts. You probably have had the opportunity to exit. Hopefully you did on this wick, okay? You still should be in the money on those, so maybe you want to close them if you haven't. Okay, now this is a monthly chart. Now, notice the risk more downside here that I've noted here. So we get below this, it's heading to the downside. That's a substantial buyer exhaustion candle. On top of that, when you come down and look at the volume, we got no buyers. We got no buyers here. The buyers were here. The buyers were here, right? Clearly the sellers were right here. So what happened on this candle? Those buyers sold. And then the ones that had anything else sold again. Now, so in other words, the smart money was using retail to get their exit because a lot of traders bought the low. So that tend to implies that this is an impulse wave, not an ABC. Now realize, if this is an ABC, and this is A, and this is B, and this is C, it's elongated. But notice we have candles that follow behind there. So we had another back test. So the way I see this is wave 2, wave 3, wave 1, wave 2. We'll get it right sooner or later if we keep driving. Wave 3, wave 4, and we get a wave 5 down here around this shelf. Structurally, it all makes sense. You look at the fibs. Look at the fibs. So we don't have a double dip. Look at the dips on these. 1, 2, 3 flushing drives. All right. Notice even in this upper trend, we had what? 1, 2, 3 peaking drives. So it likes to honor Elliott wave. 1, 2, 3 in the internal legs continually. So we can look at this as grouping 1, grouping 2, grouping 3. This tape likes to honor it. Okay. So we have like mound 1, mound 2, mound 3 in this leg, which of course was our first mound in the larger structure. Then we got our second mound, which ended here. And this was a noisy top for 5. That indicates the trend has ended. All right. So if we don't have buyers come back out of this candle, and where can I say that? In the nicest way? Where do I like? Body of this candle probably at 350. I'm wrong and I changed my mind. Otherwise, I want one more divergent lower low in price where I have a lower low in price and a higher low in RSI with the way the structure looks, because it really looks like an impulse. That's my 2 cents. I'll leave it there. All right, let's look at AIRO. Bleeders. I don't like bleeders. Bleeders get bad. Bleeders get bad. I believe, and I'm not, it was here because we haven't been talking about this stock value. So it was here. So I was looking at it as a double bottom. And I said, well, if it takes out this double bottom, there's no support. We got no support. No support. No support. No support. No support. Well, what do we got? Look at RSI. We confirmed here. This is like a hair. I mean, like a hair lower in RSI than here. I mean, hair on the weekly. I mean, it's thin, it's skinny, it's tight. Okay. However, it's not glaring. But to me, the look is glaring. And the reason the look is glaring, because I see this as Flushing Drive 1, Flushing Drive 2. So what should we get next? So Flushing Drive 3. So equality to me is back at $8. It's challenging because I know a lot of you have open positions. So hopefully some of you sold covered calls. Hopefully, at least in my mentoring to manage risk. And that's something I think we should, and those of you who want to, if it's not in fundamental trends or whatever, if you want me to do a session just about risk management and when you should add risk from a teaching perspective, I'm perfectly willing to do that, because I think this market's going to get very challenging. So since you're managing your own book, DIY, I'm the educational source. I want to make sure you guys understand that. Now, my view is whether it's a swing trade, whether it's an intraday trade, whether it's a position trade, there is some degree of risk you want. I mean, like, for example, with position trades, once in a while, if I'm doing well, I want to tighten up the whole book, everything I have in position trades, 2-3%. All right. From a structural standpoint. Sometimes I give it a little more room, 5%. So that way, when my winners are in there, I have a greater chance of holding. Very often, I need a base clean divergence. Am I going to hold 8% risk across the board in position trade? That's my 2 cents. So structurally, you guys need to decide how you want to manage it, but I'm perfectly willing to do that for you if you'd like me to. All right. Now, the only real add this week is Intel. All right. And I'm going to say 70% conviction, not 100%. The reason is the setup looks good. We've got a sell side imbalance here and a buy side imbalance here. Now, let me clarify something. I just want to make sure I express the difference. Supply and demand zones are typically measured differently than imbalance zone. The imbalance zones, we're using this euphoric count, right? So this noise right here, I'm not measuring. I don't care about this. I don't even care about this yet, right? Where I really get euphoric, right, is once we take out this high. So then we come back and we look at the bodies of the candles and we come back and say, okay, where is all this noise? Where was the noise prior? What did we hold? We're going to come back here. Well, we have some sell side imbalance right here, which this band also measures. So now we have some confluence between buyers and sellers, which is why you see even more buyers show up, because buyers showed up, buyers showed up, buyers showed up, buyers showed up, right? So we get back down there. It's probably a good space to buy. However, this is probably noted as a demand because of the wick off. However, to me, it's extremely noisy here. I can't actually show the number up here, but you got a sell side imbalance, more sell side imbalance, because this brace between this candle and this candle. That means institutions sold, right? And then we had this noise. Then we gap for whatever, likely earning. Now notice the 3 sells after. Now my assumption is that's earnings. I can't tell you for sure. And then we took off and ran. Reason is the institutions used retail to liquidate their position. They need liquidity, high price premium to get out. Now, let's come down to RSI. Now, I'm looking at this as Flushing Drive 2, Flushing Drive 1, Flushing Drive 2. It looks like equality. So I suspect maybe we get one more little wick lower and then we turn up. Then we're going to decide if we're going to buy this back. But if you measure the clean ABC here, I've noted on the right-hand side of the chart. This is equality to me. This is what I see. So there's still a decent buy if this holds. So where does my mind change? Well, see the body of this candle right here at roughly 35.52, right? Notice price is holding right there. So we don't take out the body of this candle and we stay above that 35.52. That gives me some bullish commitment or biased to the upside. All right. So just wanted to spend a second and share that. Going to be fairly short tonight because I just want to give you guys a visual. I have to still update these charts. I might not get to it to Tuesday because I have so many charts that I'm going through. I want to make sure I focus on that because I'm a little backlogged just with everything that I've been working on the side to get everything set up. Now, just as a quick note, swing trade notes, and let me finish my thought here while I was doing it. For this, until the end of the year, I'm going to hold all of the chart to like create a chart book for you guys to follow back up in fundamental trends. All right, because I think for the punch card stocks, I think you need one resource to go there since I will not be updating the articles at this point. So I wanted to kind of give you something. I would like to do a chart book externally, but I haven't figured out how to do that. If I do and it's feasible, we'll go there. All right. So the date that I have here is the last date that I updated the chart, just for your reference. So, just to try and help you guys out, just a minute. Now, let me go back to Substack and my little comments here. So now I want to point out this is my full version of my market analysis that I was doing in Swing Trade Notes. A number of you wanted a quick read, and what I just went through in the article was the quick. Now, after my direct connect with fundamental trend ends, even though I'll have access, and I'm not sure whether we're going to do a post once in a while or not. I don't know what Kirk decided. We need a completely different silo, but I think we might be able to do some news posts. I'm not sure whether he's up for that or not. We haven't really discussed that yet, but I'm up for it if that's the case. If we can't do that, we'll publish a quick read, which will be free, and then a full read. And to be honest with you, I haven't decided if I'm going to keep that in the free version or the full version because I think it's informational and I want to make sure everybody what goes on in the market. Because bottom line, the reason I do this is because I remember how many lumps and bruises I took when I had no idea what I was doing. And I just have a hard time letting people struggle with that. So I want to make sure I cover it. So, we're going to cover market tone. Now, in this case, I have the short market read, but a little longer. So I'm addressing more of the points as far as the NASDAQ. And then I'm bringing in rotation, through the sectors to give you guys a little visual there. I'm also interpreting the heat map, what's hot, what's not. I'm looking at that on a week-to-week basis, a monthly and a quarterly basis. It will be in this version, depending on whether it's applicable. Like right now, we don't have a great monthly change between this month and last month. So I showed year to date because it was more structural as far as how we laid it out. Same case with Bitcoin. We're going to continue to show the dominance. I think it's a factor as far as liquidity. And right now, I'm going to go back to the Bitcoin. I think there is a liquidity issue right now. Well, that's what I've got. Great trading, folks. Until next time. let's look at it from, okay, whether I'm going to give him a shot for 90 days or give him a shot for 6 months, whatever it might be. We're going to need a time frame to go into that. And part of that is because I'm going to take $100 of that and I'm going to pump what I do on Twitter. In other words, I've decided that I really don't want to put my capital into it anymore because as it stands now, I have a number every month that's pretty decent as far as costs that are associated in some way to what I do. However, the live data feeds, etc., are what I run to stay on top of things for fun. I'm just trading for myself. If I'm just trading for myself, honestly, I can do it straight off of flow and I don't need to monitor the other things because I'm confident enough in this trade. However, putting other people's capital at risk with my technical analysis is a different game. I have more of a commitment to that. So I want to make sure I have the backdrop. I have the tells sounded because honestly, my risk management is tight. If the market blows up, I'm going to lose a couple bucks, but it's nothing. It's chump change, to be candid with you, in the grand scheme of things. So what I want to make sure is that I have a perfect source that you can go to and feed you. So now I'm going to jump back and go to annual subscriptions or a founding member kind of thing. So the reason is because I think there's going to be a great benefit to you. And this, honestly, I couldn't get Substack on, we get 20 founding members. Then the next time you renew, it'll be $1,500. Next time it'll be 40. Next time it'll be 50. However, that will also be attached to the monthly tier. I have a number in my head that I'm comfortable with as far as growth and running with this. And as far as I'm concerned, if I get 1,000 subscribers, I think that's a fair rate longer term to pay for my service on an annual basis. However, I shouldn't bear the burden of the costs or the time to put this together because everybody benefits. And that's just what I'm asking folks here. So I would encourage you to at least register for my free version, okay? And highly consider jumping on board and supporting what I'm doing because honestly, I just want to continually improve what I'm doing. And if I can get my MVP and stuff running with Sentinel, there's a lot of things on the table. I just haven't gotten everything to work the way that I would like it to. So we're still in that developmental phase, but I suspect that'll come quickly. But let me end with that. Great trading this week, folks. Until next time.